Greetings, fellow investors. It's me, Lucas.
And me, Marcus.
Two regular guys talking about investing for regular people. So, what we wanted to cover today is with all the chaos that's going on in the world right now, why is the stock market still going up?
And we have collected 4 points that we think have contributed to this effect.
Exactly. So, I'm sure you're all aware of everything that's going on right now. We're currently recording this the 5th of June and
2020.
2020. The dreaded year. Yeah, and we have Corona. We have everything.
No,
that's
not me personally, though. Just disclaimer.
No, yeah. But there's a lot of things going on, a lot of uncertainty.
Yeah,
for sure.
Yeah, there's not just Corona. There is the protest in Hong Kong and the escalating situation with China. The US has a lot of problems right now. Basically, the whole world is in a bad place right now. 2020 has been pretty crazy, to say the least. And it's only about halfway.
Yeah, Cthulhu, see you in December. But yeah, so we basically have 4 points that we wanted to cover. And these are the fact that the stock market is decoupled from economy, how speculative the nature of the stock market is, the stimulus packages in the US, and also like how much money the Federal Reserve has been printing.
Yeah, and also the whole world, actually, because even here in Finland, there has been stimulus packages. They are not going to people, but they are going to businesses, communes, things like this. They are also important for this video.
Yeah, and also the 4-point index funds.
Yeah, how they can be rising, how they can be back to the levels they were at before Corona. The points are recovered and they are actually doing fairly well. If you invested in index funds, you should be doing bad now, considering the situation we're in, but you're not.
I'm on plus.
Yeah, you're on plus, exactly. Why are you on plus? That's what we're going to try to touch upon in this.
Well, starting with the fact that the stock market is decoupled from the general economy.
Yeah.
And this is something that's important to keep in mind, that the stock market does not represent the economy of a country as a whole, like looking at the Nasdaq and thinking that, oh, it's going up. I guess everything is fine.
Yeah, in the US, that everything would be fine just because S&P 500 or Nasdaq, the big indexes in the US, are doing well. That does not necessarily mean that the US economy is doing well.
Yeah, exactly. And there's several reasons for this. Part of that you mentioned earlier to me in private was how big some of these companies are.
Yeah, and how much they contribute to the index.
Yes, exactly. And another reason for this decoupling of the stock market is that the stock market in general, you can think of the stock market as an irrational person who switch between extremely positive about everything is good and dandy, and then the next moment everything is horrible, it's the end of the world, like everything's gonna crash, the rapture is here, sell everything before it's too late, basically. So this is an example I'm pulling from The Intelligent Investor by Benjamin Graham, and just a real short summary about what he says here about this stock market person is that you shouldn't take him seriously. You shouldn't be fixated on or you shouldn't pay too much attention to him when he comes and when he urges you to buy because everything is so good right now, or he urges you to sell because everything is gonna crash, because that's where you make mistakes. You should know your investment well, just like we've talked about in the past. You should know your investments well enough so that when you feel that, oh, now the stock market is maybe being a bit too positive, maybe it's time to sell, and then in the other is now I feel like he or she is being a bit too negative, maybe it's time to buy. And all of this is basically encapsulated in the quote by Warren Buffett when he says that be greedy when everyone else is afraid, and be afraid when everyone else is greedy. So yeah, that was way too long of a ramble for this point, but that's basically what I'm trying to say about this. So Lucas here from post-production in editing. At this point Marcus launched into a ramble which he didn't quite like, but his reaction when he realizes this is still quite funny, or both of our reactions, so I decided to keep the reaction. So now we're gonna jump to that moment. Enjoy.
I'm also rambling in this point. We're really not on fire today. But
I think it's okay.
Yeah.
I think it's okay. I get what you're saying.
I think I'm going to just touch upon this really briefly so we can move on from the speculative nature. Okay, so now I'm actually going to talk about speculative nature. Moment of silence for my failures.
I'm pressing F to pay respect.
Yeah.
I might keep this in.
Okay. Come on, I'm trying to start again and you're always starting laughing. Okay.
Wait, give me 5 seconds, okay.
Okay. So the speculative nature of a share is basically that the perceived value of a share is the future value of it, which is derived from the dividend of the share. Like the dividend is usually the actual thing that drives the value of shares. Because if you think that this share is going to provide you with a lot of dividends, you probably want to keep it. But say you want the money instantly for whatever reason, you want to buy a house, but you have all these shares lying around, then you can sell them, but you can't sell them for the total value of the dividends right away because you don't know how long this is going to stretch. So you have to put a sort of ish value on this share right now on what you perceive the future value of these dividends is going to be. So this means that the value of these shares is incredibly volatile because dividends are paid based upon how a company is doing. If they are losing money, they generally can't pay a lot of dividends, and if they do, they're probably going to go bust fairly soon. So that's why it's really hard to know the actual value of shares and how they should be valued, because you basically have to look into the future and see how much dividends you can get out of it. So that's one of the reasons why the stock market is still going up.
So then what about the stimulus packages? How do they fit into the equation?
I mean, these are fairly easy, the stimulus packages. This is basically that the government is now handing out money to a lot of places all of a sudden. In the US, they are actually giving private persons money. Like, they're just giving them money. And a lot of people are obviously going to take this opportunity. I might have done it myself if I got this kind of money just for free. You would take this money and you would just buy shares for them. And do you know what happens when a lot of people at the same time try to buy shares?
Sounds like price and demand.
Yeah, kinda. Price and demand.
Hi, it's Lucas from post-production again. I swear to God, I meant to say supply and demand. I'm not this dumb. Anyway, getting back to it.
That's the gist of it. I think that there's a lot of people right now actually trying to buy shares, even though it's a really bad situation we're in, and the stock market should be doing poorly. Still, a lot of money has entered their pockets out of nowhere, aka the government, and this also includes Europe. Like a lot of communes and maybe even like companies are also getting money. These are also buying shares, which basically bottles down to supply and demand. A lot of people have gotten a lot of money all of a sudden, and they want to spend it somewhere, and a lot of actually turned to the stock market. That's why the prices are going up.
Yeah, so then to move on to the final point.
This is the actual thing that is keeping the stock market alive and healthy in most of the world. And it's actually is that there are a few companies that are so valued at this point that they are basically carrying almost the stock market. I recently checked, I think it was the S&P 500, and when the guy I looked at, he looked through all the companies in the S&P 500, which is usually, it's considered the 500 biggest companies in the US. Out of those 500 right now, it might have been May 2020. Out of these 500 companies, only 70 were actually doing well right now in these corona-ridden times. The rest, like the 430 of the biggest companies in the US, were actually doing pretty bad. They hadn't gone bust or anything, but they were not doing good. They were a little down, some more than others. But the thing is that this index, the S&P 500 and all other indexes, they take into account how big a company is, and it contributes to the total index dependent on how well it's doing and how big it is.
So basically what you're saying is that how big of a market share is that specific company, and that's how big of a part it is in the index as well.
Yeah, pretty much.
And we'll talk more about indices and index funds in our next video. So if you're confused about what we're talking about now, just like we'll go into a lot more detail in the next one. But what you need to know here is that these really big companies that have done really well right now, they're basically carrying all the smaller companies on their shoulders. So
yeah,
the bottom line is still positive.
Yeah, generally all the companies that are doing less well, there is the FANG companies, which is generally like Amazon, Microsoft, Google, the big tech companies. Some people even include Tesla in this group. They are doing extraordinary well. Actually, Netflix is also doing incredibly well right now. I think Netflix is probably doing the best out of them, actually, with almost 40% up in May 2020, which is an insane number because Netflix was already pretty valuable. But now after this increase, it's even more so. So these few companies are doing so well that they are basically almost neutralizing the effect of the companies that are not doing so well. So even though most of the companies in the index are doing poorly, the companies that are doing well are doing so well that they can keep the value of the points of the index in total up and even exceed index numbers that were in February 2020 before Corona.
Yeah, and this is something you see in several other parts of I want to say nature, but in life I should probably say, and just human activity, which is the Pareto principle, which state that 80% of the outcome is produced by 20% of the input. So in this case, it would be that these top 70 companies, so top 14% of companies, are producing like this massive output.
Yeah.
And this principle is something that was discovered by Pareto already in the Enlightenment period. So I'm not going to go into that, of course, here now, but it's just something to
take in mind.
Look for.
Yeah.
Yeah. That this is, because it's easy when we talk about it in this way that it sounds super absurd, but this is actually not that big of an anomaly. Like this is how things are quite often, but it's even more extreme now because of the circumstances. Netflix is a good example. It makes sense that Netflix is doing really well right now.
Yeah,
because what are you going to do when you are at home from work?
Quarantined.
Yeah, exactly.
Yeah, there's all companies that are basically like tech firms that are to private consumers. Like, what are you gonna do? You're gonna Google. You're gonna use YouTube. You might order stuff off of Amazon. You need a computer for this, so you buy it from maybe Microsoft or IBM, and so like these companies are doing extraordinarily well. Also, for some reason, Tesla is doing pretty well too, probably because they are probably more like making more from the stimulus packages, that people have gotten a lot of money, and what do they want to buy? That cool company that makes electronic cars
Tesla sounds cool.
and flamethrowers and stuff.
But these are the four main reasons why we think that the stock market is still going up, even though the world is looking quite chaotic right now. And just to recap real quickly, the fact that it's decoupled from the general economy.
Yeah, which means also, that basically that even though people are out of work, businesses are small businesses are closing down, the big fish are still doing fairly well in these troubled times.
And then also how speculative it is, and then
which means that the share price is not the actual price. Like people expect it to go up, even though things are bad right now. They don't think the companies are going to go bust. So they think that Amazon, Google, Netflix, all these companies, they are going to come out of this crisis, and they're going to be even stronger when they do.
Yeah. Then also the stimulus packages that are handed out, which a lot of people are investing in stocks. Makes sense, supply and demand.
Yeah.
And then finally, what we've talked about again and again, how big some of these companies are, and the fact that they basically carry the whole stock market on their shoulder.
Yeah, exactly. And that's also why you're not losing money, even though you have invested in index funds. Because usually when we're going to touch more upon this in our index funds video, but usually when the market is doing poorly, and you have invested in index funds, you are losing money. But right now, the economy is really bad in most countries, but the index funds are still a pretty good investment. You're still doing pretty well, even though most of the economy is doing poorly. But due to the reasons we have said in this video, you're still doing fairly well. And index funds are still a good alternative to place your money in.
Yeah. At least from what we can tell right now, again, not being any experts.
Yeah, regular guys.
But if you want to, regular investors, remember. But if you want to know more about index funds, that's what we're going to talk about in even further detail next time. So stay tuned for that. So this is basically the four reasons we feel the stock market is still going up. And if you did find anything here to be useful, please like and share.
Yeah, and if you have any additional points, feel free to comment. We would love to hear some from you guys.
I always check on these videos regularly, so if you comment and have any questions, I'm always there to answer, at least for now.
At least for now, yeah. And also, if you have any points you think we have missed, feel free to add. We'd love to have a discussion.
Yeah. Okay. Thank you so much.
Remember to subscribe.
Yeah.